on this Wednesday morning. But first up, let's take a look at how the global markets are doing. And Asian markets, they are taking cues from the Wall Street. We are seeing largely green across Asian markets. The Hang Seng is up 0.6% as we speak, and the Taiwanese index seeing gains of around 0.2%. The Nikkei too up in the green, up around 0.6%, and that is something that is aiding the gains that we are seeing across the Asian markets. The SGX Nifty though is indicating that the start could be in the green. Of course, that's what happened yesterday as well, but we saw a sharp decline from those levels. So SGX Nifty up around 28 points as we speak. Let's see which way things go, whether we consolidate at these levels, whether there is more profit taking or there is some buying on the dips. But let's talk about the US markets now. Wall Street ended Tuesday's trading session higher, with the Dow Jones adding 198 points, S&P 500 adding 33, and the Nasdaq adding 107 points. CNBC's Courtney Regan gets us a wrap of all the action on Wall Street.
U.S. markets closing higher across the board. The Dow Jones Industrial Average adding 198 points, the S&P gaining 33, and the Nasdaq adding 107. Shares of Netflix climbing in the extended hours after the streaming giant reported third-quarter earnings that were better than expectations. The company's also announced it added more subscribers for the quarter than Wall Street was anticipating, and said it expected to add more than 8 million next quarter. It comes on the heels of the massive breakout success of Netflix's Squid Games, which Bloomberg reported is worth roughly $900 million for the streamer. The news not quite as good for TATA Pharmaceuticals. That stock falling roughly 65% after a study showed TATA's experimental COVID-19 antiviral pill failed to help patients with mild or moderate cases of the virus. And the ProShares Bitcoin Strategy ETF, the first ETF to track Bitcoin futures, posting a good debut on Wall Street. The fund jumped nearly 5% in its first day of trading as regulators wrestle with how to oversee the volatile crypto space. It comes also as Bitcoin continues its march higher, passing $64,000 and nearing its all-time high set last April. That's the action from the U.S. market. Now back to you in Mumbai.
All right, that's the global market action, but how will these overnight cues impact our own markets? Well, we have a research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hi guys, a very good morning. First up, Ekta, let me come across to you now. What is the trade setup looking like today?
Well, overall, like you summed up, in terms of the global cues, which I'll come to in just a minute, where the US markets closed higher. Yesterday, the markets did end in the red after hitting intraday record highs. The broader market also underperformed. FIIs were in fact net sellers, so they sold around 506 odd crores. DIIs net sold around 2,578 odd crores in yesterday's trading session. Overall, in terms of the cues, the momentum overall has been driven by the festive mood, the unlock trade, IT earnings. However, there are probably on the fringe inflation concerns due to the multi-year highs that we're seeing for the likes of oil as well as metal prices. Earnings reaction will determine how much of it is actually priced in. In terms of global cues, US markets closed higher. Asia is mixed as of now because the IMF has downgraded the region's 2021 economic growth forecast. So let's see more details in terms of an impact. SGX is indicating maybe a bit of a mix to a flattish start at this point in time. Result reactions: ACC, Nestle, L&T Tech, ICICI Securities, and results to watch out for: Jubilant FoodWorks, Havells, L&T Finance Holdings, Syngene, Just Dial, and Shoppers Stop.
Okay, all right. Ekta, thank you for that. Nupur, Ekta did speak about some stocks. Or are there other stocks on your radar today?
Well, absolutely, Sonal. Again, it's an earnings heavy day. So let's start with Nestle, where company reports in-line set of Q3 performance. However, gross margins were slightly under pressure on higher input costs. ACC missed on revenues due to lower sales volume, but beat coming in there when it comes to operating profits as well as margins on better than expected realizations. L&T Tech, there is a big beat coming in there when it comes to quarterly performance, and company now ups its full year guidance to 19 to 20% versus 15 to 17 earlier. Navin Fluorine bang in line Q2 performance. Margins, however, were under pressure due to higher input costs. Rally's weak performance coming in there, 25% decline seen when it comes to operating profits. Tata Steel BSL weak performance coming in there as well. Adjusted a bit upward and came in little lower than estimates. Apart from earnings, keep an eye on Deepak Fertilizer as QIP opens there at a floor price of 422 rupees per share. And lastly, HDFC AMC company's CFO resigns. So watch out for all this stock in today's trade.
Okay, all right. So we'll be watching out for those stocks, Nupur. And finally, Mangalam, what are the cues from the F&O space looking like?
Well, for the record books yesterday, the Nifty was down just around 58 points. But what the numbers hide is the fact that it was down about 185 points from the highs. And there was almost a violent shakeout in the mid-cap end of things. Yesterday, we were talking about, Street bracing itself for a range of 18,700 to 18,300. We almost moved to the corners of both those ranges in both the corners of the range in yesterday's trading session, with the Nifty high being around 18,604 and the low being 18,378. These two marks will be important going forward as well. Cash market flows, both the FIIs and the DIIs sold, so there was a net outflow of almost 3,000 crores. The DII is selling for almost 7 straight sessions now, and yesterday was the biggest sell, almost 2,600 crores. But the FIIs, they've been resilient and they continue to show some money in index futures. We saw close to around 1,700 crore worth purchase out there, and they also, bought some calls. At the same time, they wrote some calls as well. The reason why mid-caps fell is because the FIIs also sold about 2,150 crores in stock futures. So let's see what they did in index futures. 22,000 long positions added, and as a result of which their long exposure, which was 66%, has now jumped to around 69 odd percent. In index options, they added 61,800 calls, and that's telling you that on the way up closer to that 18,500, 18,600 mark, there would be a fair amount of hurdles because of the call writing and because of the way the market negated those levels yesterday. At the lower levels, we did see some support coming in at 18,300 and 18,400. That is a mark that is something we will watch out for. And in terms of stocks, the one stock I'll be watching out for yet again today will be IRCTC. It's re-entered the F&O ban after exiting it yesterday, and the open interest now is at 105% of the market-wide position limits. The stock ended 15% lower yesterday. Let's see what it does today.
Okay, all right. Mangalam, Nupur and Ekta, thank you so much for joining us and prepping us up for this trading day ahead. With that, we'll slip into a short break now. Up next, Nestle and ACC will be in focus today after posting their Q2 results yesterday. We will get you more on that after this short break. Stay tuned. Hi, welcome back. You're watching Power Breakfast on CNBC-TV18. Well, it's time to get stock specific now and turn attention to the earnings corner. Nestle reported its Q2 numbers, which are largely in line with estimates. Mangalam Malu is joining us now to tell us what the numbers looked like. Mangalam?
Well, largely in line with estimates, for Nestle's numbers, but they were slightly better than what HUL reported yesterday. So we may not see as violent a reaction on the stock price. Why do I say that? Well, because the domestic revenue grew 10%, and that's a streak that the company has maintained for the past 20 quarters or so. Revenues coming in at 3882 crores, a shade better than our expectation of 3860 odd crores. The EBITDA 952 crores, also largely in line with our expectations, and the net profit as a result of which grew around 5% as well. However, what's telling is that the company continues to face some pressure in the raw material, and this is something that we will monitor across the sector this time around, because gross margins for Nestle at 55.7% compared to 58.1% actually are the lowest that we've seen in the last 16 to 17 odd quarters. So gross margin at near 4-5-year lows, and the management commentary isn't positive on the margin front, at least, because they say input prices are expected to have a bullish trend both globally and locally. So yes, demand is resilient, it is coming back, but is that flowing into the bottom line is a question that we need to watch out for throughout this season for the FMCG sector.
Okay, so that's the update as far as Nestle is concerned. Mangalam, thank you so much for that. And now Nigel will join us because ACC reported numbers yesterday. Nigel, what kind of reaction are you expecting? Violent or silent on these set of numbers?
Well, I'm expecting a favorable reaction actually on ACC because those numbers looked a little bit better than what the street was working with. If you're looking at the top line, well, that missed our estimates by close to around 40 crores because volumes were a little bit lower. In all probability, they have exposure to East India, and that was hit owing to the cyclone, owing to the monsoons as well. So it appears that they deviated some part of that quantity. But remember, realizations in East India would have been weaker. So that's what helped realizations, because blended realizations on a sequential basis were more or less flattish. The sheet was bracing for a correction of close to around 3%. So that caused a bit of a beat in terms of margins that came in at around 19%, which was much better than what we were working with. Also, the absolute EBITDA came in higher by close to around 35 crores. So one was better realizations. The second factor that we're looking at is the other operating income. Well, that did see a surge up by more than 30%. So that's what helped the top line as well as the profitability. And also the company has been focusing on Project Padwat as well as the master supply agreement, which saved them cost. And finally, the RMC business, it's a smaller part of their business, but the EBIT out there came in at around 11 crores, which was much better than what they did on a year-on-year basis as well as on a sequential basis. Also, the RMC business's revenues clocked more than 300 crores, which is a little bit better. The net profit got a boost up as well on the back of a better operational performance, higher other income and lower taxes. ACC trades at a bit of a discount in comparison to its larger peers like Ultratech Cement, so expecting the stock to open up well in the green. Back to you guys.
Okay, ACC expected to be in the green. Nigel, thank you so much for joining us with all those details. Moving on, Reliance Retail is in the expansion mode and it has now joined hands with ace fashion designer Ritu Kumar. The retail major is acquiring 52% stake in Ritu Kumar's company Ritika Private Limited. The deal is a part of Reliance Retail's strategy to support homegrown brands rooted in Indian design sensibilities. Shilpa Ranipeta is standing by with the details. Shilpa.
Well, Reliance Retail is out shopping for luxury Indian designers. So now, days after picking up a 40% stake in popular designer Manish Malhotra's company, Reliance Retail has now picked up a majority stake of 52% in designer Ritu Kumar. Now, the deal will also see Reliance buying out a 35% stake held by Everstone, which had invested 100 crore rupees in the brand in 2014, marking the exit of this investor. And now, like Manish Malhotra, Ritu Kumar too is a luxury designer known largely for her ethnic and occasion wear collection under 4 fashion brands. And for Reliance, this is part of its larger strategy of, and I quote, supporting homegrown brands rooted in Indian design sensibilities. Now, Reliance also currently holds stakes in 2 other Indian luxury designers, that's Satyapal and Raghavendra Rathod. Now, for Reliance Retail's focus in general when it comes to fashion brands has been on the premium to luxury segment, where it also runs global luxury brands in India like Armani Exchange, Burberry, Coach, Diesel, among others. But what's really interesting on the Indian ethnic wear side is that another retail major in the country, Aditya Birla Fashion and Retail, has also adopted a similar strategy while picking up stakes in luxury Indian designers as well, like Sabyasachi and Tarun Tahiliani. Back to you.
All right, Shilpa, thank you so much for joining us and giving us all those details. So interesting moves coming in there. But with that, we'll slip into a short break now. Up next, we'll get you all the cues from the commodities market. Stay tuned. Hi, welcome back. You're tuned into Power Breakfast on CNBC-TV18. As a global energy shortage is seeing prices of crude and natural gas at multi-year highs, we got in touch with Dan Yergin, who is the vice chairman at IHS Markit, who gave his take on the global energy crunch and the reasons behind the surge in coal and natural gas prices. Let's listen into what he had to say.
The wind not blowing in the North Sea in Europe, and England and some of the other countries get a substantial amount of their electricity from wind. So if the wind goes to almost nothing, then you even have more call on natural gas and more call on coal. And of course, some countries like Germany have shut down their nuclear electricity. So all of those things came together. But I think, Nisha, you pointed to the starting point really was the economic rebound coming out of COVID and the way the Chinese economy really roared to life. And that started the pull, but it's now, of course, affecting the whole world. And of course, India is affected by this very much as well.
All right, that's all about the commodities market, but let's talk cryptocurrencies now. Bitcoin hit a 6-month high after the first Bitcoin futures-based ETF began trading on Wall Street last night. The world's largest cryptocurrency has now surged over 40% in October itself and is within striking distance of all-time high levels as sentiment improves and traders bet on the ETF boosting investment flows into cryptocurrencies. Okay, with that, we'll wrap on this edition of Power Breakfast, but do stay tuned. A lot lined up for you on Bazaar Morning Call.